Why is Bitcoin staying where it is? Why is Bitcoin not going to the moon right now? That's what everybody expects. Well, maybe the game has changed. And maybe it's clearly shown on the charts why it's been boring. And maybe there's a time that we can see when it's going to go parabolic. Okay? There's a high likelihood that Bitcoin may no longer operate on the 4-year cycle. And I'm going to show you where that change occurred. And we could be looking closer to a 5-year cycle. So let's be prepared. So let's take a look at some charts, right? That's what we love to do. So what I'm going to do is I'm going to pull up TradingView and we are going to have some fun with this. Okay, so what we're doing is we are looking at the Bitcoin price chart. And you can see here what we've done is we put this into a log scale, okay? And it makes the chart, here I'll show you, makes the chart a lot easier to read, right? So when we do this, Bitcoin has been operating logarithmically, and if you're familiar with the Bitcoin power law, it's a logarithmic chart. So that's what we're going to work off of. And so what we're going to do is we're going to start taking a look at Bitcoin around 2013, the 2017, and the 2021 bull cycles. Now, keep in mind that these were operating on the 4-year halving, and also there was a 4-year debt cycle that was going on, and we might be moving into a 5-year debt cycle, which could be driving this, right? So the reason I bring all this up is this right here, this red line, you can see immediately that the structure changed, okay? So in between here, we were operating at anywhere from about 60 to 120% volatility, okay? Now, between 2013 to about 2021, most of Bitcoin was purchased by retail. There weren't large institutions, there weren't any ETFs. Michael Saylor started to buy, Strategy started to buy around this time, so they weren't even really in any of the game along this entire setup, right? And so I bring all this up because something has changed clearly on the charts, right? So if we look, we get this parabolic upside, we get it down, it goes back up, goes down, up, and when we get to the down, how come what we expect is it to go back up? And it just hasn't done that. It stayed within this tighter range, okay? And so the volatility has gone down by about 50%. It's gone from about 60 to 120% volatility to about 30 to 60, about 30 to 30 or 55%, call it 30 to 60%. For the last 2 years, Bitcoin has technically been kind of boring for the last 2 years. So we start to have to ask ourselves, why is that? What happened? What changed? And I'm going to share a few hypotheses that I had and where I was wrong, because I'm wrong all the time, and what might be driving this, okay? So the first thing you start to say is, okay, what's the difference between these epochs, these eras, and now? And the biggest one is going to be we have institutional adoption. You have ETFs that got approved in January of 2024. And you can see we've been in this range for quite some time, okay? Now, that's one answer, but the other answer is I said, well, is this just ironic that, but that doesn't explain this part right here, right? From January let's call it December. Well, let's move it over. We can move it over, right? So January, right? To the following January. So we have 1 year, 2020, all of 2023. It operated within this range right here. So one of the ideas is, well, maybe this just happened to occur because we're coming out of a bull cycle. This is kind of a natural way to come out of a cycle, right? But then it just kind of stayed. So was this just coincidental, or was there more happening here that this structure that I thought, right, with the ETFs bringing in these institutions do not like volatility. They want predictability. They can manipulate markets. Those kind of things happen, right? So that all made sense. But the question then is, well, why did the structure happen here in 2023? Could have been coincidental. But if we go and we look at what happened during those time periods, there's the 2022 crash, right, in FTX collapse. That took a ton of money out of the market. That took a lot of weak hands out of the market, right? And there was also some bigger equity stuff going on. So what happened is we got rid of a lot of panic sellers in this era, right? Anybody who was stacking sats on this downward trend, or let's just call it anywhere in let's just call it 2022 to 2020 through 2023, right? Because where was Bitcoin price? Bitcoin was still at $42,000 by the end of 2023, right? So it did come up from that 16,000 and kind of doubled. These are typically more diamond hands or stronger hands. So a lot of the weekends and we had the FOMO, and we had the IPO craze, and we had FTX, and we had all this negative, and we had the bureaucracy, and the politics was just really, legislation was really coming down on it. Tough time, right? So you had this buildup of diamond hands during this area, right? And so really the structure started to stabilize and change in January of 2023. Okay, you got a big flush out of money. You had the institutions preparing, because remember, in January of 2024, when those ETFs went into place, that doesn't happen overnight. That takes time. So 2023 was really that planning phase, and I do believe institutions started to get in over-the-counter trading. We had Michael Saylor, who was doing rather well after we came out of this bottom, was doing rather well. Started to really get the word out to other companies. We had Tesla, blockchain, other people getting involved. So this is where we really started to see more of that institutional adoption. Nothing official yet, but you can see the market structure started to change. Okay? And so let's follow this. Okay? So now what we're seeing is Bitcoin has not so far hit these crazy peaks. And if we go to, let's say today, if it just moons today and we go to the top of the peak, we're at $790,000, $800,000. I don't see that happening. Okay? If it balloons overnight, it shoots up to $200,000. I'm like, okay, that makes sense to me. That's more realistic, okay, on how Bitcoin's been operating. So then let's dive into what could cause Bitcoin to get, because you can see here, if we zoom in, we're kind of in the middle of the range, this lower range. And here's the beautiful part. If you look at it, the structure changed to the upside. The floor right here has remained. That's positive. So for example, we do not want to see Bitcoin near that $90,000 range. And if we throw in some indicators, if I throw in the 50-day SMA, you're going to see that we don't want to be below $100,000, whatever, fine. The floor has been very more consistent for Bitcoin than the tops, okay? So that structure seems to have stayed in place. What has happened, though, is we've gotten a tightening to the upside. Now you have institutions that aren't buying on FOMO. You have institutions that are buying very strategically. They're staying calm. They might be manipulating the market a little bit so they can buy at better prices, okay? You've got steady ETF flows. You've got a larger market cap in general, so it's harder to move $1 trillion market than a $100 million market, clearly, right? So this is starting to tighten up, all right? That's okay. That volatility is okay. We can continue to stack sats because the upside is still pretty dramatic. Okay, so the question then goes, okay, great, Pat. Now that we're operating within a different market structure, have we reached the top? Because technically we should be around a market top at the end of November based on the 4-year halving. I believe the market structure has changed. The debt cycle seems to be closer to a 5-year debt cycle than a 4-year debt cycle. On top of that, there's a lot of stuff going on legislatively that are tailwinds. But at the end of the day, where the quantitative tightening is going to loosen up. Quantitative easing is when Bitcoin goes berserk, right? We've seen this. Like, it was when it goes parabolic. So then the next question is, when does the money start to really flow within the world? And then that would obviously trickle into Bitcoin. I'm a strong believer that any politician, especially when we're coming up on midterms, will try to get the economy into a stronger place. I feel like Trump has been holding the beach ball under the water because he doesn't want this blow off top to happen. Now he wants the economy to be just going gangbusters in midterms, November of 2026, right? So when we start getting around Q1, Q2, I think we're going to start to see this quantitative easing happening. And then he wants this thing just to run hot, right? But he doesn't want to do it too soon. So we've already started to see Jerome Powell reduce interest rates. And on top of that, Powell will be out in May of 2026. Trump will appoint his replacement. And you know what Trump has always been asking for is reducing interest rates. When you reduce the interest rates, they're going to likely get into quantitative easing. That's going to flood the market with money. That will make people happy. Happy people usually vote for the incumbent, right? So what is the trigger? And if we go all the way out to here, right? So Powell is out in May. The new guy is in June, okay? I anticipate, and I think the market anticipates, price cuts to happen, quantitative easing, all this stuff could occur around June of 2026. My only concern with this hypothesis is that typically markets don't peak in the summer month. In the summer months, it's sell in May and go away, and then come back in October, November, right? And Bitcoin usually performs the best in November. So let's say that this does turn in from a 4-year cycle into a 5-year cycle, okay? Let's run this out through the end of 2026, okay? Let's just see what happens. Let's say that this is the market structure. Bitcoin has changed from a 4-year cycle to a 5-year cycle. In addition, Bitcoin isn't going to have these as dramatic volatile highs and lows because now we've got institutional adoption and a larger market cap. We're within a tighter range. So now let's just go to the dates, okay? So if we go to June of 2026, this is where we're at. And what I want to do is, my hypothesis was that Bitcoin was going to hit an all-time high in October of 2025. I was clearly wrong. I said 265 in October. Nowhere near that, okay? So I'll admit where I was not accurate. But let's say this thing does run 1 year longer, right? Until 2026. So what could happen is if you have midterm elections and the incumbent Republicans win most of those seats, then we could see that blow off top occur November, December, or we just get to October, right? Everything's running hot and there's a change in guard that could cause a crash. Lots of things could cause a crash. I don't know what it is, right? Let's just operate that we're looking into November of 2026. So here we go, okay? Now what we're going to do is we're going to say, let's say that this can get, and you can see this here. This has been proven. Within this market structure, we've hit the top line once, we've hit the top line twice, we've hit the top line a third time. Let's say we hit it a fourth time. And let's say it's just boring for a while and it's trying to grind its way back up and it gets up over here in October or November of 2026. And let's just have fun. Let's go all the way out to December and look at where we're at. We're right around $444,000 for all those people who love Josh Manfield on X. Well, lucky for you guys, there's potentially, he could be right, and he could just be simply off by 1 year. He's saying November of 2025 is the year, and what if it is just simply pushed out a little bit further? Sorry, Josh Mandel. So That would be kind of interesting. So here we go. What are the takeaways? The takeaways are Bitcoin, I believe, based on this data, is looking like it's going to be operating within a tighter range due to institutional adoption. B, that we could be looking at a longer cycle, potentially a 5-year cycle, but likely a longer cycle. C, I believe having more money in the global economy is going to absorb money into Bitcoin. Therefore, as an indicator, we need to be looking at the M2 money supply. We need to be looking at quantitative easing and when that will occur. And I believe that will likely occur in Q1, Q2 of 2026. We are looking at a different structure for all-time highs. The beautiful part is, even though this structure is lower, I mean, you're looking at, let's just find some fun numbers. We're looking at potentially 200,000 by the end of the year. I don't see that happening. I could see us getting to $150,000, but if that happens, 150,000 is a nice round number. You could get some retail FOMO that could push it up pretty quickly. Who knows? Let's go all the way out here until 300,000. We're looking at mid-2026. And then you could get, if things get wild and crazy, we're looking at 400,000 in October of 2026. Again, right now, in a year from now, a Forex does feel kind of out there and wild. But that's kind of the structure that we're working within now. And if you give it another year of a lot more money coming into the marketplace, you get quantitative easing. This could happen, right? So the whole takeaway here, again, to recap, is Bitcoin is different. This is what I believe the structure currently is. And if it continues, now you have an idea of what to expect. So had a little fun with that one. I like throwing out predictions. I like calling myself out when I'm wrong. Do you think I'm wrong? Do you think I'm right? What do you think is Bitcoin going to do? Is it going to be on a different cycle going forward? Is it going to grind its way up forever? I mean, we still are going to have these floors that we're going to have to navigate. Is it on a 5-year cycle now? Or are we literally on the downward trend of the end of the 4-year cycle as we know it? And we're going to be moving into a bear market here. So let me know your thoughts. Let me know your comments. Love to hear those. Like and subscribe below. Keep stacking those stats and stay sovereign. Thank you.